Stocks getting hurt today again on the back of rising Omicron fears. Off the lows of the day when the Dow was down nearly 700 points. Still a broad sell-off. Every sector is lower. And this is the fifth down day in the last 6 sessions. The NASDAQ, it's in on the sell-off, down 1.25%, doing a little better, Lindsey, than the S&P, which is down 1.3%. You know, the strategy has been buy the dip recently on COVID variant concerns, even on some Fed tightening concerns. Is there any reason to think this time is different?
No, I mean, I am in the buy the dip camp right here. I mean, you're starting to see the pressure on the market over the last several days because we're actually starting to see the economic impact that Omicron can have on the economy. And so because of that, because you have companies, because you have local governments, state governments talking about implementing new restrictions or actually implementing new restrictions, you're starting to see market participants get a little bit nervous about what the economic impact can be. Now, I'm of the mindset, though, that this is going to be more of a kick the can down the road type of impact than a complete growth shock. If you listen to what a lot of the healthcare folks say, the impact of Omicron is a little milder. People are staying in hospitals for shorter periods of time. And if you look to South Africa, the death rate has decoupled from the COVID case rate. So there are encouraging signs. And we're looking for 2022 to, again, resume above trend growth.
Sylvia, as we get through these periods of market chop, and we've really been in it for a few months right now, especially below the surface of the indexes, one read is, well, this is the market telling you what the new leadership is, in which case it would be dividend-type stocks, maybe more defensive stocks, and the sort of aggressive growth areas of the market really have gotten hurt badly. The other side says, hey, aggressive growth looks pretty sold out right here. Maybe if you want to bet on some kind of a comeback or mean reversion, that's the place to look. Which of those two make more sense to you?
Hi, Mike. I actually am on the other side in terms of growth being on sale and looking to buy the dip on some of these tech names. You know, I agree with Lindsey that some of this is kicking the can down the road and you're going to have some interim volatility until we sort of sort out Omicron and build back better and whether or not we'll have, you know, what kind of liquidity we'll have from fiscal and monetary stimulus. But if you just look at the FANGs, for example, you know, the names that are deemed to be overpriced, cloud is going to be one of the biggest movements in enterprise technology. You have the metaverse, which is getting $10 billion worth of investments. You know, Amazon's cloud service could be $1 trillion business. So I just think that looking at the companies that make up sort of that Web 2.0 theme that are looking at the future, quantum computing, you know, chips, clouds, anything that will power EVs, artificial intelligence, augmented reality, those are actually the same names that are the FANGs that we bought for the services and products that they sold and devices that they sold. So I like these names here at these prices. And I don't think that rate hikes and, you know, increased tapering are going to massively impact these names. They have quality balance sheets and they can certainly survive it.